So let's first start today's meeting, guys. We'll talk about this past week's catalyst. Um, the First of all, two data points we had: CPI and PPI came in hotter than expected for sticky readings influencing rate expectations, while consumer sentiment readings added context to economic resilience. So there's mixed results, or mixed opinions rather, on whether or not they're going to hold a pause in June or if there'll be a rate hike by end of the year. But we'll see. My bet is a pause in the next coming meeting. Really, outside of any of the IPO activity, we're going to get into SpaceX and some other things. The number one thing, guys, is this geopolitical tensions with Iran. Now, as of this report, right now, the latest news just came out. Stand by. I will pull it up for you. Iran's, I believe, prime minister, uh, if the final stages of negotiations are completed, the agreement will be signed remotely by both sides and then announced. And then earlier today, Trump said that the agreement should happen by Monday. So that means that if this conflict is over and there's no more shells going back and forth, the markets should go. We're going to see that in the charts, folks. As far as catalyst next week, that will bleed over to next week. Does it happen on Monday? If it does, Sunday night, Monday, we're going to see the markets pop more than likely. Will it be a blow off top? Will remain to be seen, but we're going to start seeing the fear index drop and money inflow back into the markets. We do have our FOMC meeting with the new Fed chair, Kevin Warsh, on Wednesday. Um, and again, probably no rate cut, probably just remain steadfast. We have housing data this coming week, retail sales data, and other than that, just some basic IP earnings reports. So nothing really that's going to move the market. The major market mover is exactly what has moved the market since February 27th, and it is this conflict with Iran. And if it's over, I will be happy that it's over because it's very difficult to trade because of the high beta volatility between the ping pong tennis game back and forth between from and information from Iran and tweets from and information from the president. So as a serious trader investor, I'll be glad that it's over, and I hope you are too, as I have fatigue with all of that. So without further ado, guys, let's get into the charts. All right, we're going to first start with the NASDAQ. As predicted over a month ago, this was the top, and you can see how accurate I was. Now it did drop down. It dropped a total of from this zone to about 8.5%. I did predict if the war hadn't ended, we were going to head right down to this anchored VWAP, which is the volume weighted average price from the entire bull run. And I firmly was committed to that, and we almost hit it. But the change in direction was the positivity in the markets starting last night, so Thursday evening through Friday, with a possible deal with Iran, and it looks like that's going to come to fruition this week. So, with that being said, what we've seen now is we did close. The red line here is above the all-time high anchored VWAP, and that is a positive buy signal for this indice, which leads me to believe not only will we test this red box, but we were more than likely break through it. So onward and upward, probably 31,000 and then some on a lot of optimism coming into the market and fear dropping. So look for that on your NASDAQ related stocks. The S&P 500 failed to close above the all-time high anchored VWAP, but after the drop, we did recover to it. All right, I would anticipate that this will do the same thing. We probably will see 7,500, if not 7,600 this week on optimism, if in fact the deal occurs. Now, guys, listen, we are not out of the woods. We have seen many times or heard many times that we had a deal. I think I read a post that there's been 38 times it's been posted that we're close to a deal. So again, it seems to be that we're the closest that we have been. And if in fact it is, we cross the all-time high anchored VWAP. And when that happens, we test and hold, and then onwards and upwards, we go to challenge the all-time high at 7622. So anything in the S&P 500 should benefit from that. The Russell 2000 So let's look at the Russell 2000, adjust my timeline. Um, Small caps did well. Small caps did well. They did not throw back as hard as the NAS and the S&P 500 did, and we closed this week above the all-time high and into all-time highs into my predicted red box for resistance and predicting still 3,000 a test this week, and that's going to be strong resistance. I will actually be shorting the futures product known as RTY, folks. I will short this. I'm going to share this with you. I do day trade. I'm going to short this zone at 3,000, and I'm going to hunt 50 points on leverage. So my trade is going to look like this, and I'll have about 20 points of stop loss. So this is what my trade will look like. I'll probably hit that inside of a day or a snipe, and I'll trail it down. So I might not get the full 50. Optimistically, we could come down and retrace the level where the all-time high anchored VWAP is at that time. So that's probably the maximum benefit if we draw out this line, right? It's probably that's the most in the take profit. I will target that all-time high anchor VWAP, knowing that I'll probably get kicked out on trail. So I will short this level against all this good news because 3,000 is such a key psychological amount. And if I activate my custom indicator, you'll see that zone here exists, right? These are institutional level zones that I have plugged into the matrix. So we'll turn that back off just to keep the charts clean, but that's what I'll be looking to do for shorts. And guys, listen, I'm not saying that that's the top. I'm just simply saying that I'm expecting 50 to 100 points of sell off there, and then we'll probably head back through if in fact everything is over.